This, let me also welcome on board Jonathan Schiessl. He's the Deputy CIO at Westminster Asset Management. Hi, Jonathan. Good afternoon and good to be speaking with you. And Jonathan, for the Indian markets, the biggest trigger that is seen to be the GST rate rationalization. Help us understand how the investor community is sharing this particular move, and within sectors, which sector is garnering the most excitement right now?
Yeah, I think it's clearly a positive announcement. We don't tend to get too wrapped up from an investment perspective for ourselves with these sort of developments. We're more long term, but clearly these are moves afoot to try and spur certain sectors, and obviously you've covered this extensively already. So yeah, it's not something we get too wrapped up in, if I'm honest.
All right, Jonathan, hi. In the last few months, the kind of sideways momentum and the correction that we have seen in the Indian markets, have you used this opportunity to buy something fresh or increase your exposure in any of the sectors? What are the sectors on your radar?
To be honest, we took a little bit of weighting down a few months ago. We haven't reallocated any money back into the broader Indian market or specific stocks or sectors at the moment. We have very long-term holdings that we're happy to stick with, but we had taken down, one or two stocks a little while back. The market as a whole, obviously has been ingesting what's been happening on the tariff front more recently. We're a little bit off the highs quite clearly. We're still above the lows we saw a few months back, but the reality is, when you look at India versus other markets, I think there's a bit more excitement in the short term elsewhere, particularly in the Chinese markets, which have been very strong. So probably for the moment, unless India comes off a little bit more, we'll probably be just content with our sort of more neutral type weightings we have currently.
More neutral on India, but Jonathan, if not India, then which markets are looking good to you right now? Because yes, for India the tariff has been 50%, but for some of the other nations the trade deal is already through. As an investor point of view, which markets are you finding lucrative at this point in time?
Yeah, I mean, there's been, as I just mentioned, quite a lot of activity in Hong Kong and the Chinese markets, which have performed extremely well this year. I think also some of the smaller Asian markets, the ASEAN markets, have done pretty well as well, although they have seen some money leaving to head for China. I think most investors, perhaps excluding some of the US investor base, but a lot of investors have been reallocating back into China that, quite frankly, a year and a half, 2 years ago, was viewed as virtually uninvestable. So the markets there are still looking quite good value. They have rallied hard, but they've come from a very low base, and valuations still look quite attractive, and there seems to be stuff going on. The reality is also the tariff uncertainty is still ongoing with China, and the market's not really worried about that too much in the short term. But yeah, we still we quite like the look of China here at the moment. It still looks we've got a bit of runway, I think, for those markets.
Okay, Jonathan, what's your view on the energy basket and the precious metals, the bullion market? If we talk about the energy basket in particular, oil is edging up on US crude stock drop and the impact of the tariff scenarios. And at the same time, the precious metals and the dollar and yield scenarios, if you see so. Looking at the currency structure, the bullion market or the energy pack, all in all, the commodity front, if at all you have any view, please share.
Yeah, look, we like commodities broadly. I think the precious metal space is a very interesting one. Gold's clearly been on a phenomenal run the last few years, and quite frankly, it's been consolidating its gains over the last couple of months. But clearly, a big driver for precious metals is what's going on in the US with the worries over the dollar, worries over the independence of the Federal Reserve. And that's providing a good backstop to precious metals and gold in particular. So I think it has been working off its overbought status, and we're quite optimistic. I think in a on a shorter term that gold probably will at some stage push on higher again, because the factors that have pushed it up haven't gone away anytime soon. On the energy front, we have exposure to the energy sector. We have pulled that back somewhat recently. Obviously, we've seen quite a lot of news out of OPEC about increasing supply. Yes, there's stuff going on within Russia and the ongoing Ukrainian conflict, which is relatively bullish for the energy complex. But I think excluding that, I think the energy complex energy prices probably do look like they want to head a little bit lower, not too much. On a medium term basis, we're actually reasonably positive on the energy complex and think the energy prices are quite cheap here, and that if you believe inflation is a problem a little bit further out, then energy probably looks quite a good hedge against that.
All right, totally take that point, Jonathan. But with this, in the show, it's time now to slip into a very short break. Just a few minutes left before the market should shop, and the markets are heading towards the week closing for now. We'll track all that action and more on the other side.